Welcome. Good to be with you today. Today being January the 9th, 2019. We're here today because the Bank of Canada made an announcement this morning. I listened to the Governor, the Bank of Canada's announcement, and I read up on it, reasons why. And so we're going to talk about what the announcement was. We're talking about the reasons for that announcement, and we're going to talk about what he meant when he said that they will increase the rates over time until they reach the neutral range. We'll talk about that range is and what are some of the factors that's going to get them to make those decisions. Please note that in March, April, and May, each month there's going to be another announcement. So if you want to know what that is on the day of the announcement, please subscribe below, click on the bell for notifications, and I will deliver that to you with simple explanation. So let's get into it. So they decided today they were going to maintain the rate. The rate was 1.75. They maintained it. They maintained it, of course, this past December, and then the last time they increased it was in October. So that's good to know. A lot of people are excited because over the next couple months, the rates are gonna. There's going to be some continuity in your rates. So if you're searching for a house and your mortgage person has said you could qualify for this much house, then you could probably continue looking for a house based on that range in which they told you, okay? Reasons why they're maintaining the rates. Well, the global economy, in terms of growth expansion, what happened is in 2018, growth was 3.7%, and they're only projecting about 3.4% growth for 2019. So it's a slowing pattern, a bit of a trend there, so they're anticipating that. In fact, there seemed to be a sense that maybe in 2020, maybe some improvement, but that's just too far in the future to really know for certain, right? Also, growth in the U.S., it's pretty solid right now, but they're anticipating a slowing, a little bit more sustainable pace in the U.S. for 2019. The U.S.-China trade conflict is an issue. They're thinking that, it's impacting global demand and also commodity prices, so things like oil, gold, silver, minerals, things like that. So prices are impacting that. So this has a way of slowing down the economy globally. And then exports, this is speaking of Canada, exports and non-energy investments are projected to grow slowly. Notice non-energy, we're going to talk about oil in a moment, but non-energy, so slow growth in terms of the investment there, okay? Back when they were fighting over NAFTA with the U.S. and Mexico, in that time, investments in Canada pretty much slowed right down because investors were very reluctant, but they're anticipating slow growth. And based on that, they're maintaining the rates. So let's talk about oil a little bit. Global oil prices are very much impacting the Canadian oil situation. The U.S., they've been increasing the amount of supply of oil. So we talk about supply and demand in economics. The increase of supply has really grown at a quicker pace than the global demand. And so that's also impacting things for us in Canada. Investments in Canada in the oil sector is projected to weaken further in 2019. So that's a problem, right? Because oil, back in December, I was listening to the Governor of Bank of Canada. He was talking on another issue, and he mentioned how the oil sector is about 3.5% of GDP in Canada, which is pretty big. So if you compare that to autos, the automotive sector in Canada, he said is about 1%. So when oil is under fire and going through a hard time in Canada, that has a way of having a bigger impact. So if you think about Alberta, a very large percent, so if Canada-wide GDP is about 3.5%, if you look at provinces like Alberta or Saskatchewan or Newfoundland, they have a much higher percentage of their GDP that's related to oil. So they get hit really hard, which also impacts the Canadian economy. So consumer spending, so consumption spending and housing investments, they've weakened, weaker than expected. and that's also impacted in their decision. So bottom line, so what's the bottom line here? And I thought this was very interesting what they said, so I just want to share it with you. Said the interest rates will need to rise over time into a neutral range. And so he said, what's the neutral range? The neutral range is between 2.5 to 3.5%. So that would be the range in which, so what they do is they'll increase or decrease interest rates to either stimulate the economy or to kind of repress it a little bit. And what they're saying is they believe at the Bank of Canada that if they get into this type of range, and they're not sure exactly where exactly it's going to be, that the economy won't need to be stimulated or repressed. It's just going to kind of truck along. So interest rates, that's kind of, they call it the home. He says we want to get home when it comes to the interest rate, right? And that's so we could maintain a 2% inflation target. So I thought that was interesting. So basically what this means for us, right now, their interest rate is 1.75%. So that means we got a 0.75% to get at least on the minimum side of what they call home. There's no time frame. So that means that we're probably going to get another 3 more interest rate hikes at some point. As high as 7 interest rate hikes. So what this means is what I would say to you as a warning is I would not take on more debt than you think you can handle if the rates went up another 7 times. So just think that through. If you want to talk further, let me know. So the pace of future rate increases will depend on these 3 things. They said the development of the oil markets, so they'll be looking very closely at how that develops in Canada. And then Canadian housing market, as well as a global trade policy. So globally, if things really slow down globally, then that's going to really have a big problem. And with all these tariffs, there's been an increase in tariffs between Canada and the U.S. and other countries, China and U.S., and those increase prices, and that tends to slow down the economy. Okay? So one last thing I want to show you is this is what we got coming up. Over the year, this particular year, these are the dates in which interest rate announcements are going to be made. So if you're shopping for a house, right now we're at the beginning of January, so over the next 2 months, rates are going to be pretty level, all right? They're going to probably maintain where they're at. And in March, if they decide to increase rates after evaluating, then that'll impact it. So then we're going to have 3 months back to back to back. And then I'll be doing, on those days, I'll be doing a little information for us to go over that. Listen, I trust it's been very helpful. Thank you very much for being with me today. Have yourself a great day, and we look forward to talking to you again soon.